Good afternoon. Welcome back to the channel. Hope everyone had a wonderful week, and I hope everyone is having a wonderful weekend. We have a lot to unpack here. So, without further ado, let's just go ahead and jump into things, starting out with the economic data, and then we will get into some charts. So, let's jump into it. All right, let's take a look here at the previous week data. We had a lot to unpack with inflation data. Inflation coming in at 2.7% versus 2.6%. Again, inflation continues to be sticky, mostly due to shelter and insurance costs continue to be the main issue here. So the Fed is not going to be in any kind of hurry to cut rates. In fact, if we look at the CME group here, we can see that we're still not expecting any kind of rate cut for the July meeting, which is not this upcoming week, but the following week. But September, sure, that's when we are finally expecting some sort of rate cut to come into play. But yeah, like I said, inflation continues to be sticky. PPI was, that's the producer aspect of things. The PPI was pretty flat, so that's good. We did get our beige book readings, and our beige book pretty much reinforced, how individual sectors are holding up, especially when it comes to tariffs. A lot of what we saw in the beige book was basically a lot of hiring is kind of in limbo right now, just because companies are still trying to anticipate and stay ahead of the impacts of this whole tariff situation that we are in right now. So that continues to be weighing on a lot of the Fed members' minds right now. So all in all, not too bad. We did get our housing data as well. Single family up 7.5%, multifamily up 16.5%. So looking pretty good as far as home building. It could cool down the housing market, but we're not talking about anything drastic, of course. In fact, in my neck of the woods, we are seeing more houses stay on the market for longer. So, that is kind of interesting, but yeah, housing prices are still kind of crazy. And not to mention the rates that are out right now. So yeah, it's an interesting spot if you're a buyer, if you ask me. But anyway, we also had our Philly Fed Manufacturing Index. That was a huge spike, 15.9 versus minus 1.2. So a big increase there as far as the manufacturing goes. In that sector, unemployment claims 221,000 versus 233,000. Again, job market continues to be stable. Retail sales and the consumer continue to be pretty solid. Again, the Fed has no true reason to really cut rates because nothing is actually broken. Everything seems to be looking pretty good, and some aspects of inflation are definitely sticky. And until some of those aspects, such as shelter, insurance, go down, then what's the main reason? Without being a political one, it's got to be an economic one. But anyway, let's go ahead and jump forward to this upcoming week. We do have Chairman Powell. We do have Powell speaking on Tuesday at 8:30. Now, he's only set to deliver opening remarks at the Integrated Review of Capital Framework for Large Banks Conference, which is hosted by the Federal Reserve in Washington, D.C. He's just making some remarks. I'm sure we'll get his speech beforehand. So I'm not really anticipating anything crazy from this, but knock on wood, you never know. So yeah, we'll pay attention to it, but I'm not expecting anything too crazy. There is no Q&A. He's just making a statement, and that's about it. We do have existing home sales, our weekly unemployment claims, flash manufacturing PMI, and flash services PMI, as well as our ending the week with the core durable good orders. So all in all, a light week as far as the economic data goes. Now, if we jump into the earnings calendar, it's a little bit of a different story. Earnings continues to get more exciting. We have earnings from Tesla and Alphabet, Google, on Wednesday. Sure, there are some interesting names out there, such as Capital One, IBM, Chipotle, Intel, Newmont, CNC Charter. There's some interesting names thrown in, but of course, everybody is going to be paying attention to Elon Musk and Tesla. And of course, we get a really big report from Google. So keep your head on a swivel on Wednesday after the bell. That's definitely going to be market moving situations. Now, with all that being said, let's finally jump into some charts here. Starting off, of course, with the SPY. We can see that the SPY continues to make new all-time highs. It's just kind of gradual stair-stepping up. We can see that on the MACD, the momentum has pretty much kind of stalled. So that is something to pay attention to. We can see that clearer on, some of these smaller time frames on the 1 hour. Everything's just kind of flat, basing out these past few days, just kind of digesting the recent move. Even on the 30-minute, you can see 30 minutes just kind of a little weak. We did get a recent crossover there on the MACD. But all in all, yeah, we're still making new all-time highs. Momentum has, kind of stalled. But hey, ride the wave until the wave crashes. Trend is your friend until it isn't. So with that being said, let's go to the Qs. Same situation here. We're just kind of stair-stepping up. Momentum has kind of died down as far as the NASDAQ goes. Also, IWM chilling, kind of grinding up as well, especially after passing the 210 mark. You got plenty of wiggle room to about 230. Still looking good there. Momentum kind of chilling out. Also, the Dow, still pretty interesting. The Dow has yet to make a new all-time high. Still waiting for that break of 451.55, but holding up pretty well. If we look here at the hourly, we could argue, maybe we are in a little bit of a flag to kind of pay attention to. There you go. There's your flag and there's your pole. You get the idea there. So that could definitely be on the picture here. Now, as far as individual sectors go, utilities, look at this. The XLU breaking out into all-time highs. 83.75 on the close on Friday. This is looking pretty good here. Some of my favorites here within this sector is Southern Company, which is sitting right at all-time highs. Momentum looks good. You do have earnings coming up in a few weeks. Let's see. It looks like at the end of the month, actually, on Southern Company. You also have VST, Vistra Core. This is also part of the XLU, looking pretty solid here too. And now, not much to complain about. Industrials continue to look pretty solid. Financials look great as well, hanging out at lifetime highs. You got names like JP Morgan in there. You also have Booking's not a XLF, sorry. Goldman Sachs looks good. Also, you also have Capital One. Capital One, though, does have earnings on Tuesday, so keep that in mind, too. But all in all, the financials continue to perform well. We also have the XLK in lifetime highs as well. Momentum still just kind of flat, chilling out. So we want to pay attention to some of these squeeze setups that might be occurring on our smaller time frames to let us know if we are about to get a pullback or if we are gearing up to push further into all-time highs. Now, when it comes to, market breadth here, things are looking pretty good. 71% of names within the NYSE, the NASDAQ, and the AMX are above their daily 50 simple moving average. 61.5% are above their 200 simple moving average. So market breadth continues to look pretty solid here. Now, as far as individual names, I'll kind of keep it short here, although I do got a list that I need to narrow down. Tesla, of course, is going to be on watch this week, especially with earnings, but we finally started to push back above 325. Big institutional support down here at about the 290 mark. Every time we've come back down to this $1 billion dark pool print, we seem to bounce back. But yeah, we're at 330 here. Tesla could push all the way up to about 350, in my opinion. We'll see if that comes into light. But like I said, that's, something to be seen. Apple is in this interesting consolidation phase. Also, we can see here on like the 1 hour chart, it looks a little bit like a flag here too. So we just need to see this break really above this 213, 214, I guess you could argue 215 zone. And then once that occurs, we're looking for a move to about 220. So that looks pretty good. Also, Oklo, OKLO, you got this nice cup and handle look to Oklo, just needs to break above about 71, and then you're practically off to the races. That looks fantastic. Let's look at Dell real quick. Dell breaking above 131 and a quarter looks pretty good. You got plenty of wiggle room to about 140, which would give you a gap fill on Dell. So I'm liking the looks of that one. You got pretty solid stuff here on the NASDAQ NDAQ. Just needs to get a breakout above 91, and then maybe we can get a push all the way up to that 100 psychological mark. But all in all, there's tons of good looking charts out there. You just kind of got to narrow them down based upon what you use as far as indicators goes, where sector rotation is going. Like I said, my favorite is definitely the XLU, which is breaking out into all-time highs. Also like financials, lots of good names there as well, and industrials such as Booking and Ulta, Ralph Lauren. All these guys look pretty good. Well, these are consumer names, but Ralph Lauren also looks pretty good. Other than that, it's going to be an interesting week. We'll see if Powell says anything goofy on Tuesday. Other than that, we have big earnings coming up, and we'll see how the momentum plays out, especially on these smaller time frames. If we start to see some of this momentum start to crack on the 30-minute, that could signal a pullback. But as it sits right now, we're looking okay. Obviously, we want to pay attention to those squeezes. And just keep your head on a swivel. Anything can go at this point in time. Stair step up, elevator down if we get some crazy news. But overall, the bull trend continues, and the bulls remain in control of the market. Keep up the good work. If you have any questions, let me know, and I will see you all in the next one. Take care.